Good morning, good afternoon, good evening, yWhales, wherever in the world you are today. So it is January 18th. The world is still kind of trying to decide, are we in a recession or have we hit the bottom, or up, down, left, right? Davos is going on. And so there's a lot of news kind of coming out there around climate change and all sorts of things. But thankfully, I am sitting here in my office hanging out with Ed and Brian, and we're going to talk about something that I believe is truly the future of blockchain, where blockchain is headed, and that's the digital assets. Not cryptocurrencies. Cryptocurrencies are absolutely fabulous, but most of those fall into the unregulated securities division, which I believe the SEC is getting ready to make an announcement literally any hour on some global changes to cryptocurrency market. But that doesn't really do anything to digitize assets. Those would be considered securities. They can be managed and monitored as securities on the blockchain. And it really is kind of the future of commerce per se. I myself own a real estate company, a title agency, and a few other real estate related companies. And so I can tell you that there is a drastic need for efficiencies, both in the residential and commercial sectors, not just national, but actually internationally as well. It's a very heavy system. And with that being said, let me go ahead and give Brian a quick second to introduce himself, so my co-host, and then Ed will come over to you.
Yeah, Jay, thanks so much for having me back. It's always great to see you. So, Brian, I'm the founder of a fundless sponsor syndication investment platform based in Nashville, Tennessee, where we raise capital from private accredited investors on a deal-by-deal basis, typically medical office or light industrial flex properties throughout the Southeast, and met Jay through YPO.
Fabulous. So Ed, as our guest today, RedSwan is really doing some amazing things, but I'd like to start off with a little history of kind of where you came from, and kind of how you got to this point today of being one of the largest digital assets providers in the real estate space.
Well, Jay, thank you for inviting me. It's a pleasure to be here, and I really appreciate you bringing Brian as well, just because we have a lot of relevancy in what we're doing together. I started off in this industry in 2018, but prior to that, I was executive director at Cushman & Wakefield in terms of capital markets. So I sold a lot of apartment buildings, helped developers build and exit their strategy on apartment buildings. I've also dabbled a little bit in office buildings on a personal level. So I've had a portfolio of office buildings. So I've been in real estate for 22 years.
You know all the inefficiencies. You've done it all.
In real estate, and one of the reasons why I got out is because the industry was getting very competitive. It doesn't take much to get a broker license and get into business and start selling real estate. And we were just competing against each other, driving the price of fees down. And I figured, why keep working harder and harder for less? Let's get in front of something that's going to be huge. And when I saw that the SEC legalized tokenization, the security tokens, that was my cue to kind of make the exit towards founding RedSwan.
That's really interesting. So let's take a second and kind of go backwards a little bit. Because when you've been in the industry for 22 years, you've seen a lot, including a lot of changes in technology. Way back when you started, you probably were faxing in your MLS changes and some of your orders to the title company and to mortgage companies, followed by email, followed by uploading FTP servers and other things. How do you look at the tokenization when we're actually talking about taking the title and various assets and putting on chain, along the linear progression that you've seen from again, calling in orders most likely in the early days?
I think it's just a much easier process. I think the real benefit of tokenization is that you're really not changing the title. You're changing ownership interests in projects, which means you're really reducing the amount of sale transactions that we're seeing today. I envision if we do a good job of tokenizing assets, you'll see less and less whole properties being sold because owners will have no reason to sell their properties. They can just recapitalize their equity in property and continue being the GP. So the future is less brokers selling real estate whole and more transferring of ownership of real estate.
Yeah, that's amazing. So, one of the greatest things about real estate is the 1031 like kind exchange, which, generally, depending on who's in the administration, may have strong or hateful feelings towards. And so there's always kind of something in the air. But the concept that you're stating is that it wouldn't even come into play, because the property itself would not be sold. You're quite simply selling your interest in the property, creating liquidity where generally today there is none.
That's true, and that's the way the IRS rules are written today. But we're working with groups like Ernst & Young who are looking at how that could possibly still affect the 1031 industry, because you are trading real estate interest, and if they can provide some way of giving credit for that in terms of 1031 exchange, hopefully that will become something that will take place. But as of right now, you're absolutely right. It's a stock transfer, and there's no 1031 exchange.
Yeah, amazing. So let me just do this before we dive too deep into these questions. And I want to give you a second to really give the RedSwan pitch. You're extremely proud of your company, and you should be. Like I said, one of the top in the world of digitizing real estate, especially commercial. Walk us through kind of, how that got started and where you are today.
Yeah, well, it happened in 2018. This is my second time in the rodeo in terms of starting a technology company. And I remember my partner from the previous company that I founded and was actually venture backed. He called me and said, "Hey, you need to go to this conference in Dallas. It's a blockchain conference." And I'm senior in Cushman Wakefield, thinking, "Look, I'm so busy, I have no time for this. What's by the way, what's blockchain, right?" And he tells me his technology, there's a new technology coming out. He thinks it's super cool. And this guy was my CTO, so he knows technology really well. He says, "Ed, you got to check it out. You're going to love it. I know you're going to love it." And so because he pushed so hard, I decided to buy a ticket, fly to Dallas, and attend this conference. And I was really impressed, not by all the Bitcoin and cryptocurrency was going back and forth, but I was always thinking about, real estate. So I took a walk through the exhibits and started talking to the exhibitors who were actually brought blockchain protocols, people using blockchain for different use cases, DAOs and things like that. And I was really fascinated by it. And the first thing came to my mind was capital market transactions, right? And lo and behold, like I said, the SEC, I met two partners who were there, my co-founders, who were they were already doing real estate ICO companies, and they were successful doing ICOs with real estate. And they saw me and said, "Hey, glad to meet you. I think you should be getting into ICOs." I said, "No, I'm really into STOs." But they convinced me that they knew a lot about the business in terms of blockchain. And so we sat down, had dinner, and all of a sudden we became partners. And that's how we launched RedSwan.
That's fabulous. I love those entrepreneurial stories. So one of the things, as we start talking about, taking and digitizing the titles and digitizing, the assets, walk me through kind of what's being digitized. Is it the title? Is it a holding company? Is it a REITs? What is actually going on chain to provide the liquidity?
Well, there are various structures you can use. You can digitize the debt. You can digitize the equity. You can digitize, a shell company. A lot of things you can digitize. But we choose to digitize the equity because that's the hardest form of capital in the capital stack is equity. So basically, you take a project, you verify the ownership, you verify the title, so you know that the proper owner and title is there. You do evaluation of the assets, so you can understand what the true value of the asset is today. You then look at the debt side, understand what that is, subtract the debt from the true value. Now you have your net equity, and we take that net equity and we digitize 100% of the net equity. And then from there, we can now allocate a certain portion of that equity based on our customers' needs.
Fabulous. So we're on chain, we're tokenized. You've given it to the existing investors, or is it new investors that generally come in?
You tokenize for the existing owner. Right,
okay.
He's a sponsor, the GP sponsor. So you tokenize and create LP shares under a different vehicle, and then you can now issue those shares to Reg S or Reg D investors coming in, and that capital now goes back to the principal as equity, liquidity for his asset for selling his equity. So that's really what you're doing is just taking the shares, fractionalizing to a number of shares that equal the amount of capital he wants to raise. And then issuing those to investors who are qualified to buy those shares.
Fabulous. And again, for everyone listening, you're hearing Reg D and various SEC protocols because you are following the laws. These are regulated assets, and part of, I'm sure, your services is to make sure that during this process and in future changes to the laws that you guys are managing and monitoring to keep these compliant.
Absolutely. So the process for making sure it's compliant with the SEC is, first you start off with the token studio, where you're actually making the tokens, and you're programming them in a way with using ERC 1400 standard, which allows you to create a white sheet address book for all the tokens you create, but also limits in terms of transferability, limits in terms of number of tokens holders that can buy in. So once you've cleared all those requirements of the SEC, now you're looking for issuance, and then there's also regulations in terms of who you can issue the shares to. So in the United States, you can issue to people who are investors who are accredited, and the definition of accredited investor. So as long as they're accredited, they can actually register and buy tokens. If they're foreign investors, they're Reg S. They don't have to be accredited, but we have to do additional KYC on those investors as well to make sure they're not on any AML list or OFAC list or bad boy list that the United States has posted. And if they clear those hurdles, on our site, they get a little green check mark that says they're able to now invest. And from there, we can now transfer the number of shares they want to buy based on the amount of capital they want to allocate.
It sounds way too easy. I'm sure it's very complicated on the back end, but I love that. So let's, Brian, I'm going to cue you up here, and let's go ahead and use Brian as an example. Brian's, again, you heard the way his business operates. It's a case by case basis. So they're gonna find an opportunity. They're gonna go forward. So Brian, give a scenario, and let's hear how Ed's gonna solve all the problems in your life.
Yeah, I look forward to that. Ed, you're super familiar with my business model. We create single purpose vehicle entity LLCs. So the only thing in that LLC is one particular asset. It has its own cap stack. We just do common equity. Everyone's listed out on the Schedule 1 of the operating agreement. And then we have a senior secured lender, typically a CMBS or Lifeco or a regional, super regional bank. And so it's fairly clean. My question for you, and I'd love to learn more, for a sponsor, being able to swap out equity would create this virtuous cycle, right? Where we're meeting new LPs, we're giving people liquidity, which is the biggest challenge in my pitch and for our investors. It is kind of the golden key that unlocks a lot of things. I understand the regulatory environment is fairly set in terms of what you've described. The bigger challenge in my mind when we've done some secondary interest sales or transfers is more from, it was papered 5-6 years ago, right? And so the operating agreement, the PPM, and then what we filed with the SEC and FINRA says certain things about transfer restrictions. But the bigger challenge is really the lending debt environment, getting the lender to sign off on these type of transactions. And there's a lot of esoteric niche involved, but I'm curious, how have you been able to navigate that with sponsors?
Sure. First, with regards to your existing structure with the PPMs you published and distributed, because we're starting fresh, bringing new capital in, we create with our SEC lawyers a new PPM, one that follows the blockchain protocols, all the disclaimers that you have to put to the investors regarding investing in blockchain technology. And so once that's created, that becomes the overriding PPM. And so we bring capital, and you're actually now paying off your old investors, right? Or they're going to exchange their current shareholder interest for the new PPM shares, and new digital tokens are going to be distributed, or they're going to be bought out. So that the one you created goes out the door because they're now going to be gone. A new one emerges, and this is not going to be now the guiding PPM you're going to use going forward with these new investors. Your bank is the big elephant in the room, and we've had very little problems with with regular banks, regional banks, with HUD, and for also Fannie, Freddie, those type of loans, because they're really concerned about the collateral, and they're concerned about also the KP, the key partner or GP partner. So as long as you're not selling shares that are more than 20% of the equity interest by one individual, you don't have to go back to the bank and get their approval. And so they're comfortable with that. And also, you're not infringing upon the collateral of the asset, because they're very much concerned about that. There are some guidelines we found from talking to or reading through various lending agreements. For example, CMBS doesn't like you to recapitalize more than 49% of the equity interest, LP equity interest in your capital stack, because they sell off the securities and they don't want to change that structure. But it is possible if you come to them and show them what you're doing, and they can now charge you money and redo it, they'll do that. Also, who else is another restriction? Just basically the 20%, making sure that the GP is still the key person, key contact, making sure that everyone's being KYC'd is a big concern of the banks. But we're seeing banks call us now to ask us, if we can help in certain scenarios, because, right now the market is, I won't say upside down, but having some challenges. And so banks are looking for a way to lower their LTV, right? And so they're looking to see if they can bring outside equity to help lower that LTV, because there's no other source for them to go to. They invested in something 2 years ago. The cap rate is up 200 basis points. Their LTV goes from 75 to 95 or 100. And so they're more concerned about bringing that down to balance. Otherwise, they're really in trouble.
And I'm curious, in terms of if I, a sponsor, come to you and I want to recap one of my existing deals, timeline, process, fee structure, how does that look?
First, it takes a good 30, 45 days, depending on your legal and the support we get for information, to do all the due diligence. We have, like I said, make sure the asset is verified, the value is verified, the land ownership is verified, the sponsors are checked out in terms of their backgrounds. All this due diligence has to be done. And let's say that's done in 45 days. And now we have created the tokens, and they're minted, and they're sitting in an inventory in RedSwan waiting for distribution. And then we start to put them on our platform, and we start marketing these shares. Typically, it takes between 60 and 120 days. When we first started, it took 6 months to get the deals done, because it was so early in the marketplace. People didn't know what we were selling. They had to take a lot of time to figure it out. But now we're starting to see more people understand the tokenization, especially on the international side.
Yep.
It seems like it's getting done within, I'd say, 90 to 120 days. We're working on ways right now to shorten that time frame by bringing on additional distribution channels, like family offices and security broker dealers on Wall Street, for example. But I think it will take the time period will be shorter and shorter as we increase the size of our investor database. Right now, we started off, we had 0, and first year I think we hit 700. Now we're at 7,200 and growing. And so that helps to really speed up the process, because we know who to point to in order to join in on this particular transaction.
And then on the fee side, is the sponsor bears the fees associated with getting on your platform and marketplace, or does that get pushed through to the LPs?
The fee is paid by the sponsor. We want the LPs to have a direct purchase experience where their money goes right into the asset. And this one thing about blockchain, you're eliminating the middleman. So we have our sponsors, like yourself, pay the fees. Roughly 4 to 5% of the money that we collect is what you would pay. The charges to you, that's the only charge to you outside of the initial engagement fee. And depending on the size of your asset, for us to do all the legal work, we use Wilson Sonsini as our lawyers, which are one of the best lawyers and SEC lawyers in the country. And we use Ernst & Young as our accountants and advisors for structuring deals. And so that engagement fee covers their cost as well as our cost and the cost of the tokenization cost to create the digital token. But then that's your cost. And then the second cost you pay is, like I said, the success fee. The cost to the investor, once they've bought the digital securities, every year they're paying an annual asset management fee, and that's 1.5%. And that's basically to cover the services of providing financial statements, corporate communication, and also dividend distribution, ATS liquidity, and also K1 issuances.
Oh wow! So you guys are very involved. Once this property is in your platforms, you guys are
Yeah, I
partners.
mean, we have to be. We don't want the sponsor to have any headaches, and so in the K1 distribution is not an easy task, right? Because
Oh yeah.
somebody purchases it and they sell it, and somebody else sell it to somebody else. It trades 3 or 4 times in a year. You have to track the date of their holding position and also who the new holder is. But that can all be done on the blockchain because it's all recorded. And so there's a company out there called TaxBit that helps to track that information.
That's amazing. And you guys are using DigitShares as your tokenization platform currently?
We are. We've now. I'm announcing that we've consolidated all of our technology, so we now have everything in house.
Oh,
So
fabulous.
DigiShares is really focusing now on our Reg S. We have an operation in Lagos, Nigeria, for international investors, and using a different protocol altogether. And they were working with us on that. But for all the U.S. sales that you see on our website, we're doing this all internally now.
Congrats. That's fabulous. And that's one of the benefits of this is that you're not really using proprietary technology. It's open source. And while somebody may help you get to, a ground zero and maybe those first couple steps, you can absolutely take over from there once you understand it. Brian, I'm sorry if I cut you off, if you had more questions related to going down this path.
Well, I've got a lot more questions, but you did an awesome job answering the one kind of issue that I'm curious to your kind of response to is valuation. Is just third party valuation kind of on the marketplace, and then once somebody makes a bid at a certain pricing, it gets locked in, or how does that all work for the secondary sales?
Oh, for secondary. Okay. So primary, about we basically do a valuation of the asset and we can put the price on it and sell those tokens at $1. On the secondary side, it's going to be bid ask, right? So we use a company called Invinium that tracks all the financial statements to the token, but also we can give the tokens, deliver them to them on a quarterly basis. I'm sorry, the financial statements on a quarterly basis. So the investors know the change in value of the asset, right? That's very important. They know that it was making NOI of $1 million last year, and now it's making an NOI of $1,250,000. So now they figured that they can drill down and know the price of their share has gone up pro rata. Our broker deals would give them advice as to what they would list their shares at, what we think the market value is, but it's ultimately up to the investor who's coming in to bid against their ask for liquidity.
Has there been, to me, I think there's a big difference between commercial and residential. And, commercial, this makes all the sense in the world because these are big assets, they're heavy assets. And you saying that you can provide liquidity in 90 days is unheard of. I've got commercial properties that it takes a year to close, not because neither party doesn't want to, but you've got so many different variances and everything else that can get involved. But, residential, I see all the time come through our title company and others, and some people tokenize these things, and the first thing we have to do is undo that because title, the mortgage companies won't fund, and the title companies won't insure. So that's great that they went through that tokenization process for this residential property, but now they want to sell it, and all that work has to be undone prior to going to the next owner. And those are single family uses, single family homes. So in this process here, you're saying that as long as the lender is okay with it, you can transfer as much of that tokenization process as you want, if the buyers, have the liquidity to match that.
Yeah. So once you determine what the net equity is of the sponsor, like Brian, you can now sell those shares to other investors coming in. And then if they want to exit, if they're U.S. investors, they have a 1-year holding period. But after that, if they want to exit, they can sell their shares to the open market for whoever wants to buy it as well. So always providing that continuous liquidity option. And it always also for Brian, it provides him with perpetual equity. I mean, Brian, good and well that as you take on every project, there's a maturity process where you add your value, you hold it, you stabilize it. Now you're looking to sell it. And when you sell, that's when you actually get your capital gain and your profit sharing, your earn out on the project. Well, that's out the door now. If you tokenize this project and you issue the capital out, you're bringing 80, 90% of your capital, your equity at that value back to your pocket. You're still the GP of the property. And every year, once that property performs above, your hurdle rate, you're now splitting every year with that profit. So you're issuing dividends, you're taking your 40, 50, or 60% split as long as you're over the threshold that you promised, which is better than waiting 5 years, 7 years. Because look at today, you bought an asset 2 years ago, you're stuck. You can't sell that asset because cap rates have gone up. You'll be selling it for a loss, right? So this makes a lot more sense for guys like Brian to be able to stay in this property, ride out the wave, but be able to have liquidity, because we all know cash is king, especially in markets like today where you want to buy more assets at a discounted value, but still not be pressured to sell your asset.
Brian, I'll let you have a turn.
How much do the capital markets and investment sales brokerage houses hate you?
We're going to find out real quick, because we just issued an RFP to the top 50 brokers houses in the country. We're looking for additional partners for distribution. So we sent out invitations for about $825 million tranche to entice them to start working with us, where we're paying them to sell the shares for us. We want to, like I said, close that timing gap. And the best way to do that is, if I were to, no matter how much capital I raise for RedSwan and start hiring an army of brokers on our team, it would take time for us to train them and be able to handle the volume that we have. And we currently have about $800 million worth of bid activity on our site, just people saying, I want this, I want that, right? So in order to be able to provide that liquidity for ourselves, going through the traditional broker-dealer channel makes a lot of sense. And so we want to work with them. We want to teach them how to start selling digital assets as opposed to analog assets of the same quality.
A lot of education.
Yeah, I would imagine the kind of Cushmans of the world and CBs, the investment sales teams, this is really going to disintermediate that business pretty substantially, because there won't be, to your point, that kind of transaction volume that they're used to.
Yeah, owners wouldn't have a compelling reasons want to sell their assets. They'd rather pull their equity and hold their assets. Think about it. You spend a lot of time searching for a property, a lot of pursuit costs going after a property. You finally get one. And if you have the wrong equity partner, within 3 years, they want their money out. They're saying, sell it. You haven't made your earn out yet. They say, sell the asset. It's time for us to get our money back. You did all that work to make no money, right? So I think they're going to really appreciate this process a lot better. It's more friendly towards the sponsor.
That's amazing.
I agree.
So what, so we were able to do a single property, and you have all those things there. If I want to go purchase a property, are we able to use your platforms to do fundraising?
Not right now, just because of the speed and the timeliness of the transaction for an acquisition. And also, we don't believe in, at least I don't believe in, tokenizing an empty shell, right? And so if Brian says, hey, I want to go acquire a property, well, Brian and I both know that, 50%, if not higher, don't get done, right? They fail. They fall out of contract, whatever happens. So that'll be a wasted effort to do all that work tokenizing a shell that doesn't happen. Plus, we don't want to tokenize a shell because there's no asset there, and we're asset-backed securities. So we're focusing on recapitalizations. We're also focusing on new development projects where the land is part of the equity proposition. So those are the two cases that we use right now. But eventually, like I said, when we have 250,000 investors and they're hot to buy things, invest things, we can put a project up we know is under contract and ready to go, and be able to help folks like Brian to close that deal out. Right now, we're working on the low-hanging fruit.
No. And again, that's why we're asking these. My next one will be REITs. Real estate investment trusts. So it's a different vehicle. How are you managing, or are you managing those?
Matter of fact, we're talking to REITs right now. I was invited by EY to go to the REIT conference in November in Palm Springs. And that was an eye-opening experience. They asked us to speak and enlighten them on tokenization. The public REITs don't have much of a problem because they have a venue for exit. The private REITs have a problem because they have to, put together a NAV. Then they have to do, a redemption process. So they're promising to give liquidity to their customers. But every time there's a run on the bank, or, COVID hits and people want to get their money out, or right now people want their money out, they have a hard time coming up with liquidity to provide that service to the customers. So we're looking at ways we can tokenize or REIT assets so that they don't have to worry about the disposition process. They can let the customer come to our ATS and sell their shares that way. And that way they're totally free from that requirement.
That's fabulous.
Yeah.
Brian, we'll keep tag teaming back and forth, Ed. You're doing great.
No, I mean, this is kind of real estate. U.S. real estate would be the biggest market in the world, right? If we were able to kind of unlock this liquidity. We've all kind of heard the numbers in terms of roughly 13 million accredited investors in America. Less than 5% have exposure to direct private equity or direct real estate outside of their primary residence. How do you think about the kind of the total addressable market? And we can just talk domestic to start with. And are you on the capital raising side? Are you using kind of the playbook that some of the kind of Obama Act crowdfunding websites have used? How are you thinking about building out your distribution list? I know you mentioned broker dealers, but I'm curious if there's other, pie in the sky thoughts you might have.
The biggest part with that is education of the investor, the end user. And we came out with the model that we wanted to make sure that real estate investment was affordable for everybody. So that, our lowest common denominator was $1,000 to buy an asset. We found that was just too difficult to manage because there's so many small investors want to put $1,000 in it. It just eats up the time. So we started really focusing on family offices who are bigger check writers, institutional investors, and high net worth investors. So we just raised the bar from 1,000 to 25,000 or 50,000 or even 100,000 certain deals. And that's really the channel we're going after. And we created two funds, a value add fund and also a core asset fund. And we're going to probably have a affordable housing fund. But the funds are valued at $1,000 for those investors who don't know what they want to invest in. Maybe they're not that savvy. They can buy into the fund, which is now buying a pool of our digital assets as opposed to just buying into one. But we're really starting to focus on the higher level investor because institutions are very excited about tokenized inventory because of the speed of access and speed of liquidity, as well as family offices because they make a lot of investments in proper projects like yours. But they don't want, even though they're long-term thinkers, they want to have the ability to pivot if necessary. Like COVID hits and you see hospitality going down. If you didn't have liquidity or didn't have a digital asset, you are stuck until they can sell that property, which is still on the market, right? But if you had digital assets at that time, you can offer your shares for sale with a little bit of a discount and you'll have liquidity and you wouldn't have to go through that problem that most are going through right now.
So what's the biggest challenge that you're facing right now, either technically or legally, with this lift or possibly education? What's the biggest, kind of, brick wall that you run into when you're going through this process?
Well, education is very, very much a big challenge for, I wish I had more guys like Brian out there that were aware of token and digital assets. Because it'll be easier for me to articulate the benefits, right? Most of the ones I was able to convert, and we converted about almost 40 properties, were people I knew, they know me, they know that I've helped them, I've been in the business for a long time, so they trusted what I'm saying, and they know my level of competence. But there are so many, they're so used to doing things only one way, that you mention any word that happens to sound like technology, where you definitely don't want to say tokens, right? They think crypto. You don't want to say blockchain because they think Bitcoin, right? So anything you say that's on a technical level, they go right over their head and they just want to leave it alone right there. They don't, oh, you got me there, Ed. Just stop right there. I'm not interested, right? But now you're seeing the bigger companies, the Goldman Sachs, the BlackRocks, the KKRs. They're doing it. They're doing it. They're in it in a big way, right? And so that's how I'm now teaching the mid-level managers and sponsors that, look, Goldman's doing it. Look, KKR's doing it. Look, Heinz is doing it. I mean, you're missing out. 2 years now, you're going to be out of business or be fairly hurt because you're not educating yourself, right? And, just like when websites came out and people say, I don't need a website. My website's right here, right? My computer's right here. Oh, yeah. Well, they're not around anymore because the websites and computers definitely were much faster in terms of handling and processing customers. And the same thing with the blockchain technology, just much, much more superior in terms of what results it can get. So yeah, I would say education is the biggest challenge. And for us, raising capital is also a big challenge because there's a lot of money out there, but they all want to see it like already working and scaling up, and it is. So we're happy that it's starting to scale up now, and the price is going to be much higher. But that was a big challenge, just getting people to understand this is something you need to bet on. But I think it's all changing.
Yeah, and something I want to give a little color on for anyone that does not understand the commercial real estate market in the U.S. or abroad. In the United States, there is no like national MLS where there's a single source of all commercial real estate, all commercial deals, like a Zillow or anything along those lines for residential, where you know anyone can go on and just say, show me every single commercial property that exists. It doesn't happen. So what you have is these very fragmented, you know, kind of, I've never understood why, but you have large brokerages and, you know, CRE and others, they just hold their inventory on their books and they keep it very private, and they may post it on their website. They may not. There may be an incentive to sell it. It may be empty and they don't care about selling it. So to me, this is like the industry that even before the residential real estate market absolutely needs this disruption, because you have these, you know, insanely expensive, insanely valuable properties that if you go with the wrong broker and you don't have liquidity, you know, they're not worried about selling it. They're not worried about promoting it. There's no real way for them to nationally push that out unless you're going to one of the trade shows. And those don't happen every single day. So this is an industry that has resisted web, has resisted centralization of inventory. And so it's literally, in my opinion, they're going to skip over Web 2 and go straight to Web 3 because it actually clarifies so many of the problems that they just, for whatever reason. Brian, have you kind of felt that pain of like it's like you got to be Sherlock Holmes to find a property sometimes?
Yeah, I mean, you know, it's a weird industry, and Ed, you've been in it a long time. It's a very low barrier to entry. Right, anyone can come in and get a broker's license and start doing deals. Someone like me can just go out there and start kind of raising under the right reg offering. But at the same time, it is a very old school place run by a bunch of 65-year-old guys in a boardroom somewhere. And yeah, they are resistant to change. And if you take a look at everyone who's listening has probably bought a home before. If you think about the closing checklist or the settlement statement, you look at all these third parties there feeing the deal out, you know, there's not a lot of incentive there to create kind of a better experience or a more efficient experience for the end user. And that's really what this technology can do, is kind of reduce that friction cost, makes things more efficient. Getting the big banks and the Wall Street guys kind of on board is a huge step because it'll normalize it. But I do think it's just going to take some time.
Yeah, I agree. You know, you think about the average cost to acquire a property as a commercial property is probably around 9% or better, depending on how much pursuit costs you have chasing after properties before you find one. But when you find one and you need to close it, it's 7 to 9% cost. The title company, legal fees, broker fees, all these fees are involved, appraisal fees, due diligence fees. Well, we've reduced that to zero, right? Because now the buyer doesn't have to pay any cost. They just buy right to the token, they buy their shares. They get all the benefits of ownership without having all that upside cost, which you're right, that hurts the industry in terms of, you know, in terms of reducing their potential earnings, but it benefits the sponsor and it benefits the sponsor's investors tremendously, which is why I think, this is why I'm in the business. I think it's just a way it should be.
Go for it, Brian. I see you ready to go.
Well, and you know, I think a big misconception talking to other GPs and sponsors, they're very worried about this pace of change, right? And how technology will change their business and industry. I think it's important to realize that if Ed were able to kind of wave his magic wand and this were all to occur overnight, there's still a need for kind of best-in-class institutional asset managers, boutique GPs and sponsors that really know their business very well. Someone still needs to manage the assets. These investors don't want to worry about changing light bulbs or toilet paper or negotiating leases, right? That's what they're paying you for. And so it's just going to look different, but there's still a huge need for kind of the asset management GP sponsor to be involved at the end of the day.
Absolutely. And there's also a need for, sharp brokers, real estate brokers who know what they're doing, because they can help put value, they can help refer. I mean, it's all about knowing the resources that are going to benefit your client. And if tokenization is a resource that is a better fit, all that referral business is income for them. All that valuation is also potential consulting income for them. And so, and there's everything in between they can possibly do to help that transaction take place. Or they can even get a broker-dealer license and become part of the trading process, right? So all that's still wide open for brokers who are in the industry. There's no need for them to just retire. I think they just need to lean in and re-educate themselves.
It's fabulous. So real quick, just a quick question on the technology. So you're putting these shares out there, and are they going into the client's wallets, or do you guys custody for the investors, or is it a mix of both?
We can custody for the investors. We prefer to give them the wallet and let them self-custody. So they can create a wallet on our platform. It's really easy. Just using your email address, you can create a wallet, and you can store your securities. And keep in mind, with digital securities, when you put your token shares in a wallet, it's not like Bitcoin. If you put in the wallet and somebody steals your wallet and steals the coin, it's gone for good. No, we have all the shareholders on a cap table on the blockchain. So if anything's lost, we can burn those security tokens and replace them. So the wallet is just a convenient place for you to look and see what you have, as well as our dashboard tells you your ownership. But the wallet also allows you to move your holdings from one wallet to another, or a custody department, or whatever you want to put it. It's just more portable.
Yeah, and I think this is the part where the DeFi degens really kind of get out of alignment with what's being done here, because at the end of the day, these are securities. They have real world value, and they also have real world consequences for these being lost. And so you have to do this. It's not a choice. Brian, if Brian issues shares to someone and they call and go, hey, there's an issue, you have to correct that. That's kind of the issue. So I never see a problem with that. I always like to make it aware, people aware that this is not like, if you go put $1 million into RedSwan and you make some investments and you lose your seed keys or whatever's happened, you're going to call RedSwan and they're going to fix it. You're not just kind of, SOL, which is, again, I think the biggest difference between what's going to be occurring with these real world assets and digital securities compared to cryptocurrencies, which is you lose your seed key, you click on the wrong link on your email and you get hacked and it's gone. And there is no one to call. And there is no guarantee of anything. So, yeah,
that's true, Jay. And that's some of the education that I'm talking about. You have to let the public know that these inherent risks you have with cryptocurrencies are not the same as digital assets or real estate. But right now they think it is, because they've heard so much of the bad news with, people that they trust to custody their assets that all of a sudden go bankrupt. They think the same thing can happen with us. No, I mean, you have your assets. They're recorded on the blockchain in your name. So that's probably the safest place for you to hold your asset.
So as we kind of come towards a close, I'd really love to, Ed, if you can expand on that a little bit. What are you, the future of this is, again, there's so many, I hate to use the word dead assets, but essentially stale assets that are sitting on books, they're paper, they're in shelves. And, there's all this real estate that does need new investors, does need new life, new use cases. But a lot of times, the owners, and I suffer from this as well, it's a heavy lift to sell these things. And, sometimes you can just say, well, I'll just keep it for one more year. I'll extend the lease on that. And I'm not the best owner, and that tenant may not be the best use case. So you end up not making the best decisions because, quite simply, you don't want to go through the sales process, which can be onerous and quite expensive. In fact, very expensive, depending on where your loan and where your NAV is. So Ed, with that kind of in mind, what's your thoughts on where the future of this really is going? And it could just be tokenizing everything.
Well, I think tokenizing everything is probably correct, because there's many assets in the financial industry that are being tokenized. Goldman Sachs just announced last week that they launched their tokenization platform, and they're tokenizing financial instruments, right? So for them to create their own platform and launch it tells you, and they're a major financial institution, that tells you where things are going. And so every instrument that people can trade, I think, is going to be tokenized. When you get down to like residential homes, it doesn't make a lot of sense because you're now breaking, or you're running against the securities laws, because you tokenize your home to issue it to investors. You're now making a security, right?
Yep.
So it doesn't make sense to make a security out of a home that has no income, no revenue, or you're going to turn it into a rental property. Okay, now you're going to turn a single family home into a rental property. It's just kind of cumbersome. But I think when you start looking at the commercial real estate industry, there's trillions of dollars of projects that are sitting there that is just stale assets, stale cash, right? You're having cash locked in a property for 15 years, right? Yes, it keeps growing and growing, but it's locked in that asset for 15 years. Think of what you can do if you can still have the asset and pull 90% of that cash out, right? You can buy probably 4 or 5 more properties. So I think that's really the goal, is to allow people to have that freedom to pull their capital out and redeploy it, but still be able to manage, because they're good GP managers like Brian, manage your portfolio very well and help your investors, create more wealth.
Love that. Brian, as we kind of bring this towards a close, your thoughts and learnings from this podcast. I appreciate you joining me.
Yeah, no, Jay, thank you as always you always have very thoughtful guests and content. This is something that we've explored quite a bit. I've had some folks on my podcast as well who are in this space. I think you're the most sophisticated and articulate person that I've spoken to on this. And so hopefully it does help get people educated, because this is the future, in my opinion. As we kind of round out the conversation, I'm curious, as a sponsor or an LP, if you're on either side listening to this, what would you say would be kind of a signpost that there's capitulation in the market towards this? What's kind of the big elephant in the room that you need to get over for there to be broad acceptance and really a large market participation on this?
I think that, first of all, thank you for the compliment. And that's why I decided to come on this, because you had that conversation with Jay and you weren't aware that we even existed. And, there's a lot of miscommunication out there. And so I'm really happy that we're able to sit down here and talk about that and kind of set the record straight and enlighten you on what the opportunities are. But I think, to answer your question, just the benefits of having, these digital opportunities is kind of like you look at the TV route. TVs were tubes, then they became, components, then they became flat screens, then they became digital, right? Digital TVs now allow you to watch almost 3,000 different programs, whereas the tubes were 5 channels, right? I think people have to look at the digital real estate in the same capacity, that it gives you so much more optionality in terms of financial tools, in terms of liquidity, in terms of diversification in your portfolio. I mean, in terms of, transparency. People buy REITs. They don't know what's going on in that REIT. They don't know all the costs that are being thrown in there by the management. They don't know the financial statements of each individual property. All they see is the end result and the yield they're promising. And they don't even know if that's produced from the assets. So there's a lot of misinformation and very limited transparency in REITs. And so I think people creating their own ETF that's democratized, like we're doing, allows them just to buy what they want, right? And see the financial statements. Buy the properties in your neighborhood. Buy the properties in the towns that you like. Buy what's relevant. And, that's the best way to make an investment, is buying something that you are familiar with, right? As opposed to buying something somebody else tells you is great. So I think that's the big announcement I like to make, is that all this is possible when you digitize the asset.
I love this. Ed, what's the best place people to find you, want to learn more, or they've got a whole bucket of real estate that they want to tokenize?
My website, www.redswan.io, is we have all of our properties are there. We have ways to communicate properties that you want to tokenize, also properties you want to invest in. So we encourage people to sign up. But on my LinkedIn, to get private chats, I'm happy to talk to anybody about what we do. So those are the 2 best ways to reach me, is through LinkedIn or to our website. Thank you for asking.
Absolutely. No, really thank you guys for the conversation. Brian, I really appreciate the time. You were very helpful to me on this. Ed, again, you reached out, you saw Brian and I talking, and you go, no, they're missing some things. And so I appreciate you reaching out and saying, hey, let me help educate you. And hopefully we're educating our audience, because I've learned a lot here today, and I'm really excited for what you guys at RedSwan are doing. I understand the lift you guys have to do, because not only do you have to prove that your product is better, but you have to prove that your product is real. A lot of people have never heard of it. And so in this new emerging asset class, congratulations for being on the bleeding edge of this, doing it right. Again, so many people just go, it's digital. Don't worry. We can skate the laws. But everything I heard, you are following the laws. You have the correct legal representation, and you're also making sure your clients follow that as well. So again, congratulations to everything you guys are doing. Super, super excited. And again, for anyone listening that wants to know more, I would absolutely encourage you to reach out to RedSwan. And by the way, if you're looking for investments, you want to kind of find something from the ground up, absolutely give Brian a reach out over there at Excelsior Capital. Brian, where can they reach you real quick? I'll give you a plug.
Yeah, I appreciate that. So Excelsior Capital, best way, just like Ed said, I'm very active on LinkedIn. Look us up on a company or a name basis at excelsiorgp.com. We have a lot of content up there. Be happy to chat with any folks that want to learn more about what we do.
Awesome. yWhales, catch you next time.
Ryan as well. I love Tennessee and don't have any Tennessee properties on our platform right now, so we should talk.
Yeah, let's do some business together, Ed. Let's get some deals going.
I'll take a small commission for setting this up.
We're trying to eliminate that, Jay.
We'll see you guys later.
You didn't hear that one.